Just let me know. All right, guys, we're going to go ahead and get started now. And as we jump into everything, I want to go ahead and throw up the slide really fast and let you guys know if you have questions after the workshop, like you can definitely come talk to me. But if you want to go to termsandconditions.co/Adorama, which is our website, you can send us an inquiry, just submit the little contact information there, and we can reach out and you can just correspond with us related to any questions you guys have, either regarding a topic we're going to discuss today or just something else maybe we don't cover but it's on your mind as it relates to kind of the operational side of running a business, okay? All right, and I'll leave that up for a second. I want to go ahead and introduce myself. I'm Caleb. I'm one of the co-founders here at Terms and Conditions. And I want to give you guys a little history about myself and then a little history about our company, just so you have a little context, and then we'll jump into some of the more complicated stuff, okay? First and foremost, I want to share with you guys something that is a little personal for me, but something that has kind of been a journey of discovery for myself over the last few years. And it's simply this, is that I've really found that I'm genuinely passionate about helping people work the job they love. And I say that, and my previous employer, before I came and started Terms and Conditions, and I started doing this full time, must have hated me because I would always be trying to convince my coworkers to quit and go do the job they mentioned that they were thinking about doing, or it was like a hobby. I'd be like, you should quit, you should go do that. And then eventually, I ended up doing this full time. But I want to kind of rewind about 6 years ago and tell you guys about when I started my first company. It was a small little production company based in Georgia. And I started out, and honestly, compared to most people, I felt like I had a good edge. I had been a part of a few multi-million-dollar companies, and I was in management, and kind of had a good, little bit of insight into the back end or administrative side of things. So I thought, starting my small little company, it would be fairly easy. I felt confident in what I was doing, but when I got into it, it was a little bit of a different story. It was a whole world of things that I had no idea even existed, obligations, filing requirements, things to maintain and keep up with. So I remember that first year, there were so many times for me personally where I had this reservation and almost fear of whether I was doing things right. Is this the correct thing? It was this underlying insecurity I had because I just wasn't super confident in what I was doing. I didn't feel like I had the adequate knowledge to be able to manage my business properly. And for you guys, do we have anybody in here that owns their own business? Just out of curiosity? Is it 2 of you? 3? All right. You're not really quite willing to admit it, but yeah, maybe. All right. And how many people are just doing photography or something as a hobby, but maybe are considering doing it more full-time or making it official? All right. Oh, there we go. All right. I like that. Well, I don't want you guys to be like me. Even if you've already started your business, you've been operating it for a while, and there's moments where you have this times of insecurity or just question of whether I'm doing something right or properly, it's not a really great place, and I'm sure some of you guys can relate to really be in. So really, that's where Terms and Conditions was birthed out of, is a place where we want to be able to help people and come alongside people and partner with them, build friendships, relationships, but help them become confident when it comes to the operational side of running their business. Now, we do and I'll say this, we like to say this, we're personal trainers for entrepreneurs, and we're here to really coach you through the complications that go along with running a business. All right, so that's kind of the simplest way to outline it. Just like a personal trainer would help you get in shape, help you get on an eating regimen, and show you the proper form for the right exercises, we're going to be there to help you with your business, help you keep up with maintaining filing obligations and understanding the technicalities required to operate your business properly and effectively. We do this through 2 ways. One is business coaching as it relates to the formation process and establishment of a company. And this is a process that generally for a client working with us would take anywhere from 1 to 3 months, depending on what type of business you're trying to get set up and what's going on. And then we do coaching by the hour. And so I just wanted to throw those up there so you guys get a general idea. Every topic we discuss today really does fall into one of these 2 categories. Most of it is just kind of one-on-one coaching by the hour, so you guys kind of get a general feel. So keep that in mind. But the reality is, if you have questions, we don't charge anything just for a free consultation. It's not like we're an attorney where you have to, as soon as you call us, we start the clock and it's ticking and there it goes. So you guys can always give us a call with general questions related to your business. Even after the workshop, if you go to termsandconditions.co, our phone number is right there and you can call, and most of the time you can catch me in the office and I'll be happy to talk with you. All right? No questions are dumb questions as we go through this. I'm going to break and give you guys an opportunity to ask me any questions that are on your mind as it pertains to each section we kind of shoot through. So if you have a question, feel free to ask it, and like I said, no question is a dumb question. So we're going to cover a total of 5 topics today. We're going to look at common business structures, and then we'll take a peek at some filing obligations. We're actually going to look at filing obligations and things you need to keep up with New York, related to New York. And we'll also do a little contrasting with New Jersey, since it's kind of neighboring here. And then we're going to jump into some quick accounting tips. I'm not going to spend a ton of time here, but I want to talk about it because it's important. We'll look at some common tax breaks. And I have one here that I'm going to just briefly mention for you that I didn't put as a slide, but I want to throw it in there because it's important, it's a big deal. And then we're going to finally look at sales and use tax. All right, and then with each of those sections, we'll break for Q&A real fast, 1 to 2 questions, and then we'll jump into the next one. Maybe give you a minute to give you a little brain break from it, okay? All right, you guys ready for this? Here we go. First, we're going to talk about corporate structures. And we're going to look at the 3 main structures that exist out there for the average small business. We're going to start with sole proprietorship, and then we're going to run through limited liability companies, and finally, S corporations. So first, sole proprietorships. So sole proprietorship is essentially a business that has no legal distinction. There's no legal existence for it. It's just an individual out there conducting business. So if you're doing something, you're generating income from it, then you pretty much fall into that sole proprietorship category. Now, this is a great way when you're just starting out to operate. It's super easy, and we generally see people that are making anywhere from $0 to about $10,000 operating as a sole proprietor. Or 10 to 15, somewhere in that price range. They're great for people that don't have a lot of expensive assets. If you don't own a house, you don't own a car, you maybe don't have a bunch of expensive equipment, a sole proprietorship is a great structure to operate under. Once you start making more money, you start acquiring more expensive assets, or personally you have a lot of expensive assets, it's not really the most ideal structure, okay? And then it requires a very minimal amount of administrative work. And I want to say this, and it kind of pertains to all the business structures we're going to look at today. And it's simply this, that generally the administrative work that comes along with running a business is dependent on the level of income you're at. The more money you're making, the more transactions, the more you have going on, the more administrative work that follows suit. And I guess it kind of only makes sense, right? So here's the number one question I get at Terms and Conditions when talking with people who are operating as a sole proprietorship. And it's simply this, it's how do I bring legitimacy to what I'm doing? It's just me conducting business, making money with either my side hustle or something I'm trying to make my full-time job. How do I bring some legitimacy to that, right? And so the first thing you can do is register an assumed name. Now that's simply a registration that's done with the county, but what it does is it allows you to operate under a name that's distinct from your own name. So to give you an example, let's say I start doing photography, I'm making some money, things are going well, but I want it to be a little more official. It's just Caleb McLeod doing photography work. I can file an assumed name for, let's say, Amazing Photography. So Amazing Photography is my business name, right? And so that allows me to use it for banking purposes, marketing purposes, even on my website I can go ahead and throw that up there. And it makes it a lot more official. People can write checks to it. Rather than just interacting with Caleb McLeod, they can interact with my company name, even though it's the same thing as me doing business as myself. So it's a great step that if you're a sole proprietor or you're just starting out, and this is a hobby and you want to make it seem a little more official, you can get that registered. And this is something that we commonly coach people through. If it's something that you never heard of and it's a new idea to you, we'd love to help you walk through that. It's not overly complicated. And the next is open an official business bank account. This is really essential, guys, especially if you plan on taking any kind of deductions related to business expenses that you're making throughout the year when you're a sole proprietor. Having clear and separate finances from your personal income and stuff in your business is a really essential thing to do. And so having this separate, distinct business bank account goes a really, really long way and can save you a big headache when it comes to your taxes at the end of the year, and it also makes things more official. All right, and then I left that slide in there. Business license is not really relevant if you're in New York and New Jersey. They don't really have those. Most states do though, but I'm not going to really get into the technicalities of that as it pertains to New York, because it's really only related to really technical businesses and professional businesses. Most photography companies don't need to mess with that. So now we're going to take a look at a limited liability company. Yes, I'm sorry, you have a question? Yeah, to register an assumed name, you don't have to fall into any of the categories I just discussed. Anybody can do it. Even companies can register to assumed names. Like if I have an officially registered company and I want to operate under a different name with my company, I can file an assumed name for it. So it's not just individuals.
What is the terminology that you use? Because I can't hear you.
Assumed name?
Assumed name.
Yeah, it's important to note that's the way that New York refers to it. In Georgia, where I live, it's a trade name. There's also fictitious names in California. There's DBAs. All that's one and the same. So if you guys are in different states, you may come across a different name. It's just basically the ability to operate on something that's different than your legal name, whether at an individual level or at a corporate level. All right. We have limited liability companies. Now, this is a structure where the members of an organization are not held liable for the debts or liabilities of the company, okay? It's something that's officially registered with the state. So this is something that you accomplish with the Secretary of State, you file it, and it actually makes a legit registered corporation. Now this is an awesome structure for people who are really getting off the ground, things are really going well for their business. We see a lot of people, once they kind of peak over that 15,000 mark or 20,000 mark, they start to register their LLCs, and then it's generally a really good time to begin to look at it. And you know, I bump into people all the time though that are making $250,000, even $500,000 and have an LLC. And there's things that you can really do with them to make that a beneficial structure. So this is just a generality. It's not like an absolute, like if you start making more than 50, you have to move on to something different. It can still work for you as an LLC. They provide protection for your personal assets. This is huge, and another big reason. We're going to talk more about that here in a minute. And these do require some administrative work. And I would say a little bit more than a sole proprietor, because obviously generally you're making a little more money than you would as a sole proprietor when you're operating with an LLC. All right, and then they're going to bring official legitimacy to your business basically because you have a registration that's done with the state and accomplished with the state. And to give you guys a little bit more of a kind of clear picture of what I mean by that, let me just tell you a quick story about a girl that we worked with last year. Her name was Mandy, and Mandy was a graphic designer. She was super talented, and she lived in Atlanta, and she was doing work kind of as a sole proprietor. Things were going well for her. And then she got contacted by a really big corporation in Atlanta. And they said, hey, we really want you to do a lot of design work for us. And it was going to be more money than she had made the entirety of last year just from that one job that would have only taken a few months for her. But there was one small hiccup, and it was simply this. The company was unwilling to work with an unregistered business. So as a sole proprietor, she didn't qualify. And they said, hey, look, if you want to take the time to get registered, we'll happily work with you. So like most people, when you've never looked into it before and you get faced with that, it's like, I don't know what I'm doing. So she ended up getting connected to us. So we were able to coach in a matter of a few months kind of through everything she needed to do to get it set up, walk her through the process to make sure she knew how to manage it moving forward. So she was able to secure that job, get that income. It was a big deal. And now she has something that's legitimate. And that's just one example of how having something that's actually incorporated and registered with the state can bring a little bit more legitimacy to what you're doing over just a sole proprietorship. Now I want to talk about some commonly neglected items for an LLC. Now we bump into these quite a bit. So if someone registers an LLC, we'll see on occasion that individuals don't get what's called an employer identification number. Now you may be wondering, what is that? Well, it's a tax identification number, like individuals have social security numbers, right? A company would have an employer identification number, commonly called an EIN. So that's something you need to do. If you register an LLC, it's an essential component to go ahead and also get your employer identification number. You can't get too far without it. It allows you to have credit history that's distinct, that's separate with your company rather than your own personal, and it also keeps your personal information more secure because you're not having to use it on paperwork. Next is an operating agreement. This is like the number one thing. And so an operating agreement is really just a foundational document that defines how the company operates, as the name implies, right? Operating agreement. And this is a document that would generally outline who's in charge, how that person in charge, conducts business and how they go about making decisions. And then even sometimes order of succession. What happens to the individual that's in charge if they pass away or something happened to them? Who inherits the company? Different things like that can be outlined in an operating agreement, but it is key for protecting an LLC. If you register an LLC, you get it set up with the state, and you don't get an operating agreement, you can kind of be leaving the back door open, if you will. So you want to make sure you have one in place to really give you a solid, protection when you have an LLC. All right. And lastly, official business bank account. This isn't as common. Once people register an LLC, most of the time they've gone through the step of getting their business bank account, but we'll still run into it where sometimes it's just out of ignorance, people don't do it. You pretty much have to. You cannot be operating with just your own personal account when you have a separately registered company. You want to have separate, clear finances, in banking and all of that, especially when it comes to tax season. It's going to make a big difference for you. Now we're going to look at the last structure here, so stick with me and then I'll break for a second to give you guys a little bit of time to digest and we can answer any questions. And this is probably the more complicated of the three, and this is an S corporation. And just officially it's a registered corporation with the state like an LLC, but it has the ability to issue stocks and have shares. Now, the S part of S corporation refers to the way it's looked at for tax purposes. Essentially, it's a company that's looked at as a pass-through entity. And what that means is liabilities, profits and losses, all that not liabilities, just profit and losses, pass through to the individual's tax return at the end of the year. So it's still a really great structure for small businesses or even a personal business owner. I have two companies, the two that I own are actually set up as S corporations. And I'll tell you a little bit more about that here and why I chose this structure. But anyways, it's a great structure. Highly suggest it. All right, these are good for people making, around 50,000. Really, once you start to kind of get over that threshold of 50, it's good to start looking at S corporations. And honestly, there's no maximum. I mean, I bump into S corporations, multi-million-dollar companies all the time. They're great structures that facilitate growth well, but they still work for a small, business making $50,000, $60,000. They bring protection here for your personal assets. It really separates the liabilities for your business. And LLC does this also, but even more so, case law substantiates and supports that a registered corporation over an LLC sometimes gives you a little bit more protection. So there's this protection. We'll talk more about that in just a second. And this is huge, and this is the reason why I operate both of my companies as an S corporation. And it's simply this, that you can pay less in self-employment taxes. Now, I'm all about that. If the IRS provides a way for me to pay less in taxes, I'm going to take advantage of it if it exists, right? So that's one of the reasons why a lot of people choose this structure. There is a moderate amount of administrative work. It's not overly complicated, guys. I mean, for one of my companies, I probably spend an hour and a half a month, that's it, on just administrative things. Now, I know what I'm doing, and I've been doing it for a while, but once you get it down, it's really not that terrible. Obviously, the more income you have, the more administrative work that'll come along with that, especially once you start hiring employees and things of that nature. Okay, and then lastly here, it brings official recognition and legitimacy to what you're doing because you have a company that is registered with the state. It's a searchable entity. People can look you up. They can make sure you're legit in the same way they would with the LLC. In that story I told you about Mandy, if she had an S corporation, also the same rules would have applied. All right. So this is what I want to kind of jump into as it pertains to S corporation, and it's that paying less in self-employment taxes, because this is such a big reason why most people choose this structure. So let's talk about that for a second. It gets a little technical here, so bear with me. S corporations generally have the ability to take income in two ways. One as wages, and the other as what's called a distribution. Now, if you guys work for an employer, you get paid wages. That means there's withholdings done on your pay. You get it, right? You can all look at your paycheck and be like, man, look at all that money I had before all those taxes and everything came out, right? Well, with the S corporation, you generally want to still have withholdings done and take your income as a wage, but you also have the special benefit of taking what's called a distribution. And the awesome thing about taking income as a distribution is that it's not subject to self-employment taxes. I think I threw that up there. And that's a 15.3% tax savings on the portion of the income that's taken as a distribution. Now, distributions are only available to the owners of S corporations, but I assume that since we're discussing it, you guys would probably be the owners of your own company. So let me look at a more practical example, try to really break it down for you. So let's look at Joanne's photography business. Let's say she makes $100,000 within a year, and she takes $50,000 as wages, and she decides, I'm going to take the other $50,000 as a distribution. And just so you guys know, that ratio, that 50-50 ratio, is not something I made up. It's actually a fairly widely, and some even professionals and CPAs will be a little more conservative on that, but it's designed to ensure that you're taking your distributions in what's considered to the IRS a reasonable way. And if you have questions about that, we can talk more about it. But just know you don't want to take all your income as a distribution. It can get you in trouble. And so you want to do about a 50-50 ratio, wages to distributions, all right? So she takes $50,000 as a distribution, $50,000 as wages. So what ends up happening is she saves $7,650 in taxes at the end of the year. That's a big deal. You know, obviously you scale that. If you made $200,000, you could exempt about $14,000, $15,000 from taxes. That's a lot of money to save, right? It's nothing to shake a stick at. It's pretty good. So this is one of the primary reasons most people move to having an S corporation. Now, it's possible to also have an LLC set up to be elected as an S corporation also. And so maybe if some of you guys in here or someone watching the live stream has an LLC and they're making, you know, 50, 60, 70,000, they want to look at getting that S election. That's something we can talk about, walk you through. And I do want to say this, I didn't mention it at the beginning, but our company, we're primarily a coaching company, but we do have professionals and licensed CPAs that work on staff with us. And so we have the ability to do all of the more professional stuff that relates to the tax side of things also. They just send me out here to do all the speaking on the boring stuff. Maybe I'm trying to relate, okay? All right, let's go ahead and take a look at the last thing in this section here. And I kind of threw it out there in both the LLC and the S corporation examples that they bring protection to your personal assets. And also there's a separation of liabilities. And that boils down to this idea in this thing called the corporate veil. So let's take a look at that. And to do that, I want to just talk through real quick with you guys a court case. And we're going to look at a court case revolving, and I'm going to throw it up there, but I'm just going to tell you about it. So this is about a guy named Rodney E. Lewis. Now, Rodney was a good old boy, lived in Alaska, and he started a tow truck company, and it was doing pretty well. He filed a assumed name for ABC Towing, but he was operating as a sole proprietorship. So it was not a registered corporation, it was just him doing business. When things were going so well for him, he hired an employee. Now that employee was driving out on the roads in Alaska one day, and I don't know the full extent, but there was basically a gas spill all over the road. And what ended up happening is it violated Alaska's anti-pollution laws, all right, which I believe was a misdemeanor plus fines and penalties associated with that. And so what ends up happening is Rodney ends up in court about the situation, and the court is very clear with him that because he's a sole proprietorship, there's no distinction between ABC Towing and Rodney E. Lewis. And although he wasn't the one that did it, because his employee was representing him, that he was personally held liable for that. That misdemeanor, those fines, those penalties, that fell on his shoulders. And so this idea of the corporate veil is that when you register an official corporation, is you get this separation. And they use the term veil because it's like, you know, like you have a veil that kind of is a layer of separation. That's what happens when you register a company. That, and this is kind of more an official definition for you guys, you get this separation between you personally and your business. And I'll give you a quick example, maybe something a little more relatable for you photographers or videographers out there. Do we have any wedding videographers or photographers in here? All right, we got one, that's great. Well, let me give you an example. You're a photographer or videographer? Videographer, okay, great, even better. So let's say you have tripods or maybe some gimbals and stuff, you're at a wedding, and someone trips over a tripod and they hurt themselves and they say, oh, I broke my ankle or twisted my ankle, and you know, they sue you. If you're a company, you're registered, you're an LLC or you're like an S corporation, they could sue your company, they could even bankrupt your company. But it doesn't necessarily mean they can come after you because there's a separation. But if you were a sole proprietor and they sued you, well then they can. That means if you have a house, you have a car, all those things are now on the line in this lawsuit because you weren't a registered entity. Right? And so this corporate veil is the number one reason people go ahead and say, you know what, I'm going to go ahead and take that step and get officially registered rather than just operate as a sole proprietor. And honestly, I had a lady ask me in one of our workshops, and I'll just throw it out here because I think it is helpful. It's not that expensive. You know, a lot of people think, oh, I'm gonna have to pay all these extra fees. You know, in New York, it's actually fairly affordable, and it's not that much to keep up with to go ahead and get registered. So it really is worth it. You know, once you're cresting that 10 to 15, it's starting to become less of a hobby and maybe something you want to try to work as a career. You know, going ahead and getting registered, and at least starting out as an LLC or an S Corp is a great way to go. All right, what questions do you guys have for me? I'm done talking, please. Anybody? Yes.
So besides the less paperwork of an LLC, what would the advantage of that structure be over an S Corp besides the income differential?
Yeah, so there's two things, and I kind of threw it in there, but it's kind of complicated. The question is, what's the main benefit of an LLC over an S corporation rather than having to do less administrative work? And there is a slightly better corporate veil representation for actually registered companies over limited liability companies. And so you get a little stronger of a corporate veil separation between you and your company. So that's like one reason why you would choose an S corporation, I guess, over an LLC. Outside of that, because you have the ability to walk through the step of electing an LLC to be recognized as an S corporation, there's really no other benefit other than maybe if you want to have investors or shareholders, because S corporations have the ability to issue stock. So if I'm starting a company and I want to have some equity to be able to leverage either to get additional capital or to have partners come on and really have a vested interest, I may want to actually register to corporation so I can say, hey, I'll give you 10% ownership, I'll give you some shares here, you can own stock in the company. And so it gives you a little more flexibility, more technicalities, but for the average, if it's just you're going to be you and you're the owner, almost hands down we're coaching people what terms and conditions we're going to recommend what they call a single member LLC, and that's just an LLC with just one individual running it. Yes?
How easy is it to move from an LLC to an S corp and vice versa? Like, would you recommend that?
Yeah, the states don't allow you to jump from one corporate structure to the next. You literally would have to dissolve your entity and reform as another corporate structure. So if you register as a limited liability company, there's no way to convert to a corporation. Yes?
What are the associated costs between an S corp and an LLC?
It varies. So if there's no definite, the associated cost between an S corporation and an LLC, what's the difference? There's really not a ton of ways to really nail down the exact difference. In Georgia, and this is one I'm most recently familiar with just because I helped a couple people this past week there, the cost difference to set it up is only a matter of actually, if I remember correctly, they're the same cost to set it up, but the management of it's a little bit more expensive. And we can talk more about why after the workshop if you're really curious. But generally, with S corporation, there's a little bit more to manage than with an LLC. And so you end up with a little bit more administrative costs. But for the client that we were working with last week was less than $1,000 annually. For them, it was well worth it because they wanted to have other investors come on and in on the situation. All right, let's go ahead and jump into the next section here. And this one's going to be real quick. I just kind of want to run through these. We can talk afterwards. You have another question, okay? We're going to run through these. These are some general filing obligations you have to keep up with in the state of New York. Now, all of these aren't going to apply to every situation. They do apply to the three structures we just looked at: sole proprietors, limited liability companies, and S corporations. But some of these may only apply to an S corporation as employees or an S corporation, or some only apply to a sole proprietor. Does that make sense? But all of them are general requirements. So I want you to just kind of get an idea of things you need to keep up with. So we'll go through all of them. Assumed name registration, something done with the county clerk office. Sales tax certificate of authority, and we're talking about sales tax at the end of this. Department of Taxation and Finance. Your biannual reports, which is done with the Secretary of State. Certificate of attestation of exemption, and that is a mouthful to say, which is done with the Workers' Comp Board. And then we have workers' comp insurance and disability and paid, and then the withholding return with the Department of Taxation. And so these are some of the general requirements. If I had a business in the state of New York, I would actually have to keep up with pretty much every single one of these with the way my business is conducted right now. Now, someone's just starting out and they're just starting their own little photography company, probably wouldn't have to. But just so you can get an idea, these are general things that you need to contend with. Now, it does vary from state to state, and to give you an example of that, I want to go ahead and transition to just show you New Jersey really fast here. Oh, you know what? I almost forgot. before we go to New Jersey, I do want to take a second to mention this. I bump into people all the time in New York that didn't realize this. When you're in the city and you own a business, there are actually 2 special taxes you have to contend with. This isn't necessarily a filing obligation, but I just wanted to let you know in the city of New York, so in any of the boroughs here, you have an unincorporated business tax and then a general corporation tax that's unique to the city. And we can talk more about if you guys want to know what those exactly are and how they pertain to your business or if you have a business here, but just know they exist, okay? So New Jersey, they have a trade name certificate, and that's just like the assumed name in New York, done with the county clerk also. Then they have the special business registration, the NJ Reg form. It's done with the Division of Revenue. You got your annual report. That's also done with Division of Revenue. Just didn't put it on there. Then we have, CBT 2553, Division of Taxation. Department of Labor imposes self-insurance and workers' comp insurance. So you can kind of see there's definitely a difference in New Jersey, but still a good list of things to keep up with, right? I think, yeah, that's all for that one. Any questions right there? All right, we're going to go jump into the next one then. So this is some general accounting and tax things that I want to just cover with you guys. But to do that and kind of kick this section off, I want to talk with you about a court case, another one here. This one's good. I like this. This is about a guy named Martin Olive. Now, Martin was a young entrepreneur, 20 years old, was in college, and he decided to start an herbal vape shop business. This is a business he launched in California. I think the year was 2006, maybe. And he starts off, things really start going well for him. By the time he's, and I'm going to throw it up there for you, by the time he's 22, Martin is, so successful he decides to drop out of college and do this full time. This guy's having a great time. I mean, their business is doing well. I mean, he's having movie nights where you can get free popcorn and drinks. You show up, they're having yoga classes. I mean, things are going well. He's taking trips to Europe. He's got mad money in the bank. Well, 2 things. Martin, one, was a sole proprietor. But then secondly, and this is the issue, is he was operating as a business, but he wasn't keeping good accounting records. And in his books, he was showing that there was no cost of goods sold. So he was selling a product, right, his herbal vape stuff, but apparently there was no cost to acquire it, right? So there was a discrepancy that initially kicked off an audit by the IRS. Well, why this is a court case is because Martin had money and decided he was going to fight this audit and the outcome of it. So he takes the IRS to court. And who knows that doesn't go well for you. The government only cares to do their job well when it's like money on the line and they're auditing you. I assure you. Any other time they're terrible, but when they're doing an audit, they're really thorough and good. So here's what happens to Martin. He fights it. He says, listen, and then I put it up here. I was young. I just started. I was in college. I was ignorant. I had no idea what I was doing. No one told me I had to keep track of my cost of goods sold. I just had no clue. How can I be responsible for this when I had no idea it even existed as a requirement? Well, the court was very clear to him that ignorance is not an excuse for doing what's right or what you're required to do. So not having the knowledge, unfortunately, didn't save him anything. And here's what ended up happening. It's that simply he owed about $400,000 in penalties, back taxes, and things related to his discrepancies. That's a hefty fine. I don't think Martin was in business after this. If he decided to start another company, he should definitely get some help, maybe hire a CPA. All right, so why do I bring that up? I bring it up because it's so essential to keep books. I cannot tell you, this is probably the #1 thing for the average small business that I bump into is people don't actually keep any accounting records. They're like, oh yeah, I got money, I put it in my bank account, I bought that equipment, yeah, that was right off. But they're not keeping any paper trail, there's no record of it, nothing's going on. It's not that difficult. I mentioned that for one of my companies, it takes me about an hour and a half, a month. That's it. That's a super small amount of invested time for a huge return. Because now I have clear records. If I get audited, I know everything's in order and I can substantiate everything I'm doing. So real quick, some key things here are keeping a separate bank account. That's going to make sure your business finances are clearly different from your personal finances. So when you're writing off business expenses and things like that, it's all over here. All of those are coming out of my business account, nothing related to my personal. Using a professional software is also essential. You can keep a spreadsheet if you're small. The first year I operated with a spreadsheet, I made like $10,000 when I started my small production company many years back, and that worked good for me. But you quickly graduate from that, trust me. And so QuickBooks, Zoho Books, Xero, FreshBooks, Quicken, Wave App, these are great. Some of these are even free, guys, and they're not overly complicated, not necessarily intuitive, but they're not overly complicated to get into and start using. And I do want to say this, for a lot of people that are starting out and they get into an accounting software, if you're not experienced, you need help, we do hourly coaching to get people started, help them get set up with the essentials, set their chart of accounts, show them how to reconcile their books, understand their balance and asset sheets, and look at their profit and loss statement. So the essentials for basically keeping basic accounting, if you need help, we can walk you through that. Okay, and then these also, I'm going to throw all these up here, are really awesome things to help you track your expenses. When you're going to claim a business deduction, you want to make sure you're tracking your receipts, keeping records of everything, so that way you can substantiate if it's ever questioned whether that was a legit business expense. These apps right here, a lot of these are free. Most of them, well, I think some are pay to play, actually. There are a couple in here that are free though. Like Mile IQ clearly tracks mileage because you can deduct that, and we'll talk about that more in a second. Shoebox is great, Expensify. I think Shoebox you can take for pictures, like picture of a receipt, because if you're like me, you'll make a business expense, put the receipt in your wallet, and then you'll wash your wallet a week later, and then the receipt's ruined and gone, right? So, being able to take a picture of it is super helpful for me because then I have another record of it, and it just, is another way to track everything I'm doing to make sure I'm keeping myself covered. Any questions about any of those or just general accounting that you guys can think of? Yes. If you put personal money into your business account, there's a lot of facts and circumstances in this that would come into play with that. So generally nothing. That looks like basically an investment from the owner of a company. But it depends on how you're operating, what's going on. If you're a sole proprietorship and you have a business bank account, then you're just moving money around. It's really not. It's nothing. Now the other way around, if you just drop money into your personal account from your business, then that is a tax liability to you. It's not like just free money you can just take over and not pay taxes on. It's income that's coming to you. And so you're going to get hit either with full self-employment taxes and income taxes on that, or if it's a distribution, just your income taxes. Yes, one more, go for it.
I'm sorry, you mentioned before about the photographer, their equipment, if somebody gets hurt. So in regards to photographer, do you have any insurance that you suggest for someone to get?
Yeah, we do have some insurance that we suggest for photographers. We're going to talk about that here in the next section. I'll let my colleague Ben get up here and give you some more the practical stuff related to insurance and retirement, stuff like that. So we'll get into that. So let's go ahead and look at our next section here. This is going to be really quick here. We're just going to cover some business deductions. Now I want to say this, and this is super essential with business deductions. I'm going to put all this up here. The IRS is very clear that in order for a business expense to be deductible, it has to be both ordinary and necessary. Now obviously, ordinary, that makes sense, something that's ordinary to what you're doing for your business, and almost these are almost one and the same if you look at it. It's something that's necessary to carry on your business. The IRS is clear that it doesn't have to necessarily be indispensable to be necessary. Like for example, I do photography and I buy a flash. Well, is that necessary? You could make an arguable statement that it's not necessary, but I mean obviously it's really hard to do anything in low light. If I'm doing a wedding, there's reception, and they turn the lights down. Without it, I'm pretty much useless, right? So it would definitely be an ordinary and to me an arguable necessary expense, although maybe not indispensable. And so this is a great litmus test when you guys are buying things for your company. And if you get to a place where you're purchasing something, you have to think is this really a business or is this actually a business expense? Should I be writing this off? And if you can't answer, oh, that was necessary or it would be something ordinary for me and my business, then you probably don't want to be writing it off as a business expense. All right, so some common deductions. I'll just go through just 3 really common ones that exist. I bring the HomeBased Office up because it has changed a little bit this year. But whether you guys knew this or not, you can do a little bit of deductions on basically your space of your house that you use exclusively for an office. So if you work from home, like myself, I have a small room that's only an office space. I don't have a TV and a couch in there. I can actually deduct that square footage. This year it's changed a little bit where it only counts against your self-employment tax that you're going to be paying and not your income tax. With the home-based office, so the example I have behind me is a standard deduction, the simplified version of this. There is a way you can do like an actual cost breakdown and look at like the percentage of different things used, like internet percentage, electricity percentage, and all that, and try to deduct that. Most CPAs and our CPAs lean just towards the simplified model when you're going to go, to do the home-based office deduction. But it's great to know if you work from home when you have a designated space that you use as an office. Next is your vehicle. I think we're all fairly familiar with this. Now, if you guys live in the city, you probably don't do a ton of driving. But maybe if you don't, you commute, maybe into the city or just commute it out of the city to do work, you drive, you can deduct your mileage when you're going out for business purposes. A couple of good examples of driving for business-related purposes would be visiting clients, running errands. If I'm meeting with the client I'm trying to secure work with and I go to coffee, I drive to Starbucks to meet with them, that's a business, I could write off the mileage there and back. Or if I'm a wedding photographer and I drive to a wedding and I drive back, I could write that off. Or even if I work remotely, like I have a co-working space I work at or a remote office, the drive there and back. And then lastly, we're going to talk about travel here. And this is just to give you more context for, I think, I botched that, hold on. I meant to put this as one slide and I forgot to change it, so just bear with me. There we go. So with travel, and I think most people would probably be fairly familiar with this, but it's still good to just go ahead and cover. You can deduct when you're traveling for business purposes, airfare, taxis, Uber, Lyft, those things are all deductible expenses. The shipping of your material, like if you have a shoot in a different state and you ship a bunch of gear there, or even if you have to check bags, you can deduct that. All those things, when it's for business purposes and you're traveling for business, you can go ahead and write those off. And I did have it on there, and you probably just saw it, and I just skipped it, but you still have to kind of follow the ordinary necessary when you're doing that. So keep that in mind. Or anything else, the IRS kind of throws that in there. It'd be ordinary necessary related to your business trip, you can deduct. So they kind of throw a blanket statement in there for people. Meal expenses. This is a great one because you can actually do the actual, but a really cool thing that exists and a lot of people don't realize is the gsa.gov. If you go to that website, they offer a per diem rate when traveling that you can use when you claim a deduction. It's widely accepted, and it's a free resource the government has. And so I could, just to give you an example, I can just type in a location. Let's say I'm traveling to Seattle, Washington. I can type it in, the dates I'm going to be there, and they'll give me an acceptable per diem rate I can deduct for meals. So if I'm busy, I'm going to be moving from location to location. I'm not going to be keeping track of all my meal expenses and all my receipts, and I'm running through fast food. I can just use the per diem rate. It'll help me out and just keep track that I actually went on that trip and then keep a copy of the per diem rate that I'm deducting. So if you just go to that website, it's really cool. And then I threw this here at the bottom because it's super important, and there's a lot of people that have this misconception about kind of what you can deduct when traveling. And it's this: if you go with a dependent or spouse, they're not automatically just going to be something you can write off, like their ticket or their fare or their expenses associated with them coming with you, because they're not related to the business that you're doing. Like if I want to go to California with my wife, we're going to go to the beach, but I'm also doing some work out there, well, I can't really write off her airfare because she's not going to be doing work. She's just coming to vacation. It's personal purposes, right? So you can't just write off everybody that comes with you just because one person's going on a business trip. And the IRS even would go as far to say that if you're traveling somewhere and you spend more days doing things for pleasure than business, then you shouldn't write off the airfare at all. And I see so many people, and this is also something that's really important, that they think, man, I want to go, California. I'm going to, book a ticket, and then, they're trying to text their friends oh, I'll write it off as a business trip because I'm going to take pictures of the sunset while I'm out there and add it to my portfolio. That's not a business trip. That doesn't work. I've seen in many cases where people get audited because they're writing off business expenses, and the IRS will go as far to say, show us sufficient proof that this was a previously booked business engagement, that you're eligible to write this off. Do you have correspondence with clients that were requiring you to travel here that this was a business trip for? So you really want to be conscious of that. It's not something you can just flimsily be like, yeah, I'm just going to go here and I'll take a few snapshots while I'm out there. I'll find someone to take a portrait of and I'll call it a business trip. You really want to make sure it's a legit thing if you're going to write it off and claim it as a deductible expense. Yes?
What if you're actually doing like portfolio work, extensive portfolio work in that location?
Yeah, extensive. That could be tricky. I would say this, and I can follow up with our CPA team, but if you're not going to receive any type of monetary gain from going, I wouldn't write it off. Yes.
I'm from Germany. I just came a week ago, so I've
Okay.
been for events and meetings. They don't necessarily give me business, but it's just network. So would that count as well if you travel to network?
I didn't catch all that. Say it one more time, sorry.
Does it count as business travel if you travel to network in other cities or countries? I mean, you don't get business right away, but it's still.
Yeah. Does traveling, I got you now. So does traveling to network count as a business trip? Yeah, so like if you had a conference or a big like networking event that you were going to that was an established event that pertained to the business activity you were involved in, then most likely that would easily be a business-related expense. You could easily substantiate this was pertaining to the work and what I'm doing as a company, and that this was already scheduled, legitimate, established event that I was going to. Now, if you're calling networking going to see your family, I don't think that would qualify. Can't network with your family. I mean, you can, but I don't know how lucrative that is. I think that's all I had. And I think we've gone through a couple of questions already. Anybody else have any more for me? No, that's fine. All right, so we're going to look at the last section here. I want to give you a glossary of terms. I went through this the other day with a group of people, and I overly complicated it. I'll be honest with you guys. I kind of botched it for them, and they all gave me blank stares when I was done. So I want to try and take a more casual approach. What I'm going to do is I'm going to still kind of scroll through these slides, but I'm not necessarily going to go off of them, because it's more of the technicalities behind what I'm trying to say. So I'm going to try to convey it in a very understandable and relatable way. But if you want to cross-reference what I'm saying and make sure I'm legit, take a picture of the slides and you guys can go read it yourself, okay? So first though, I want to break down 3 terms for you. I want to break down nexus, tangible property, and then digital goods. So we're going to talk about sales tax, and then we're going to look at use tax. So first, nexus is just another way to say sufficient physical presence. It refers to the idea that where your sufficient physical presence is where you owe sales tax to. So if I live in Georgia and I have my businesses in Georgia, then that's where my nexus is, therefore I pay sales tax to Georgia. If you have a business in New York and you live in New York, then therefore that's where your nexus is, you pay sales tax to New York. Tangible property is pretty obvious. Anything that you can tangibly touch. This clicker is tangible property. My laptop here, the chair you're sitting in is tangible property. CDs, photographs that are in physical form. Photographs on a thumb drive, tangible property, right? Because it's something physical that holds those photos. So that's tangible property. And then lastly is digital goods. Digital goods are things that are exchanged electronically, email, things that you can download. Like I bought a song online, that was a digital good. Or if you guys use I don't know if anybody uses online galleries to send stuff to people, like ShootProof or PicTime, you've heard of those? Those are ways to send things through a digital means. Now, why do I bring that up? Well, I bring it up because it's important to know this, that New York doesn't charge, at least right now, sales tax on digital goods. So anything that's really exchanged digitally, there's no sales tax on it. That's great. But things that aren't, there is. So let's see here. I'm going to leave that one up for a second. But basically, if you have, we're going to use photography as a primary example here, but this really can pertain to anything that's being exchanged, through tangible personal property or as means of tangible personal property. But we'll just, because I think most people in here are photographers, we'll talk about photographs and photography. Before I do that, I do want to tell you guys a story, because I get this all the time, and I think it's really important. I'm going to try to keep this short for you. But in preparation for this workshop, I was doing a little bit of research, reading some tax analysis just for kicks, and about 8 hours in, I decided that my brain was going to explode, and I would call the state for some points of clarity. Now, a lot of people that start off in business, that's where they go to get their information, is they call the state to get what the resources they need. If you're kind of that, I'm going to do it myself kind of person, you just start doing your own research. The states, it's important to know the states are not going to be held liable for giving misleading or incorrect information. If they tell you something and it's dead wrong, then it's on you. It's not on the state. There's nothing you can do about it. Even same goes with the IRS. There's a couple court cases, and I don't have the reference of it. So guys, if you want to know it, I can give it to you. where there was a gentleman that called the IRS to get information. They told him the information. He followed it to a T. It was wrong. He gets audited, so he goes to court to fight it, and the court says, basically, the IRS cannot be held liable for information that they give, even if it's wrong. So, and the same goes for the states. And so to give you a prime example of this, I called the state to ask them my questions related to sales tax, actually. And my question was kind of complicated. It was this. I called and rings, and they have this great hold music. Have you guys ever called the state before? Secretary of State, Department of Taxation, they have the same hold music. I've been calling states for the last half decade. And I call the state, so I listen to this hold music for a minute, pick up, it's this cool dude or whatever. He's like, yo, what's going on? I'm like, hey, I'm calling. I'm a photographer. I offer a service. So therefore, I know I don't charge sales tax, but I'm just curious because I was just wondering if there's any exchange of personal tangible property. Is a service that I basically had to get contracted for, is that subject to sales tax when there's an exchange of personal tangible property, or is it just the actual property itself and the value of the property? I just want to clarify. So he stops for a minute. He says, wow, yeah. He's like, well, as long as you break it down on your invoice and you have let's say, your DVDs or your CDs, or I don't know, I guess it was old school. I'm like, DVDs or CDs, bro? What are you talking about? If you have those separate line items, then you would charge sales tax for just those. But you going out and taking the photo, your fee to do that, that's not going to be subject to sales tax. I was like, that's cool. I don't believe you. I was like, can you, but I didn't say that. I'm just like, that's cool, man. I was like, not that I don't believe you. I always try to make it seem oh yeah, I'm sure you're right. But can you just send me some, either I'm just looking for some references to the code or to some tax analysis that support what you're saying. It's like, oh yeah, no problem. Let me, can you hold for a minute? 20 minutes later, he comes back on the line. He's like, yeah, I got it right here. So he gives me the reference. I go on and I read it, and I have it right here for you guys behind me. It says essentially the exact opposite of what he told me. So most people would have heard the information, thought they got the right answer, and then would just hung up the phone and moved on, right? So this isn't necessarily what it says the exact opposite of what he told me, but this is, let me see here. I'll talk about that in a second. So this is the reference right here where it says the exact opposite of what he told me. And I really break it down on this slide right here. It's that reference then that you guys can look at the tax analysis. The SB-A09, parentheses 42S is the official one. But here's how it works in New York. If you exchange any personal tangible property, the entire service that went into the creation of that is subject to sales tax. So if I have a shoot that I'm doing, I hire a model, I rent some equipment, I go ahead and let's say I have a line item on my invoice so I put my model on there, $500, I put my renting equipment, $200. I go ahead and list my service to do the photos as $2,000, my day rate's $2,000. And I pass that over to my client. Well, they're going to pay taxes on all $2,700 of that if there's an exchange of personal tangible property. If I give them a thumb drive with those photos on them, they just paid sales tax on basically $2,700. If I email them those photos, exchange it digitally, there's no sales tax. If there's electronic transfer of it. Now, there are some exclusions here with that. Now, obviously, if you print it and you give it to somebody, there's an exchange of personal tangible property, so obviously the same rules apply, you charge sales tax. Now, the state does make it clear that, and this is key, if someone does not live in New York, then you not need to collect and pay sales tax because they're outside of the state. They're outside of where your nexus is located, right? So someone living outside of the state, no need to charge them sales tax. Now, it gets a little complicated because sales tax is actually different depending on where you're at in New York. I don't know if you guys knew that or not. It's not the same everywhere. So it's actually different from county to county. So there's two ways you can figure out what sales tax you need to charge people. One is you can look up by address using the sales tax rate tool. I put it up there for you guys. And that will tell you how much sales tax you need to charge. Also, some accounting software like QuickBooks has a really awesome button. You just click it and it automatically calculates it. It's based on the billing zip code of, and even the same would go when you look it up at the rate, the billing zip code of the client, whoever's receiving the photos. So if they're in New York, then you would use their address to figure out the sales tax to charge them. You can also, if you're old school, you want to read a publication that has a chart that breaks down the rates. Publication 718 does that for you. It's important to know sales tax is required to be paid quarterly. So if you're exchanging tangible personal property, client really wants, and you can tell them like, hey man, I'll give you photos of the hard drive on it, but I'm going to charge you sales tax on the entire thing. If they really want that, you charge sales tax and you're required to remit it quarterly. And you can go ahead and get registered in that link down there where you can pay it, and you can actually get registered there. You can pay it through that online portal. The state makes it really easy for you to go in there and remit the sales tax that you've collected. All right, any questions about sales tax? Yes.
So as of now, it would make more sense to transfer things digitally to avoid the sales tax.
Yes, it just depends. I mean, if you're gonna, because the client, yeah, if possible. So in Georgia, the rules are very similar. And so for most of my clients, I let them know, because people sometimes will ask like, hey, can I get a DVD for my grandma? And I'm like, I can. It's probably easier for you to go somewhere and get a DVD made. And I have actually started, because I do a little bit of video production, I have like a list of different places that will make a DVD for you that I email them. I say, look, if you go there, I don't have to charge you sales tax on my $3,000 service for whatever, and typically it's a wedding that I'm filming. And so you guys can, so most people are way more inclined. In Georgia, the rate where I'm at, where most people are, it's not any more than, unless you're like dead city, about 6 or 7%. So it's not extremely high, but 6% on $3,000 is a good chunk of change. So most people are way willing, once you explain the reason, to go ahead and receive it digitally. But yeah, absolutely. There's some great services out there. I've used one personally called PickTime. ShootProof is another big one that allow you to, especially with photography or photos, exchange them digitally. And they basically, your galleries, you upload it. They're like really nicely formatted. It looks beautiful when the clients receive it. And some things, like even with some of those galleries, they have the option where you can, your clients, when they get on the gallery, they can purchase physical prints and physical books of your photos. And then what happens is that gallery company charges the sales tax. And they give you a commission. And you don't have to worry about collecting or remitting it because you're not the party handling it. Now it's this other company, the gallery company, that's charging the sales tax, exchanging the personal tangible property, and they just give you a commission on it. So that's a cool feature that a lot of galleries are integrating now that actually helps you out a lot from having to keep up with the sales tax thing. In Georgia, where I'm at, I have to do it monthly. It's a pain. And if I forget, then there starts to be penalties and fines, and I throw that up here last. If you don't pay your sales tax and remit it, and you're required to, that's not the right one. Hold on a second. No, wait. Did I pass it? Oh, I guess I passed it. All right. Anyways, I don't know what happened to it. Anyways, regardless, there's penalties and things that are associated with not doing that. So you want to make sure you're on top of it if you are exchanging a tangible property. Okay, so now we're going to move into use tax. And this is simply a tax that's imposed when no sales tax is charged to you when you purchase an item. Now, a lot of people don't realize this, and I'll give an example of Adorama here. I live in Georgia. In Georgia, when I buy something from Adorama, which I do commonly, they don't charge me sales tax. And why? Well, because they don't have a nexus in Georgia. They're only here in New York. And so I can purchase an item there, but what's funny is I'm actually still required to pay a use tax on that item. So there was this big hoopla a few years back, and I don't know if you guys remember this with Amazon, edging out the business, and a lot of people were upset because people weren't basically being charged sales tax. So Amazon could undercut the market. Why would you go to your local retailer where they're going to charge you sales tax? Why would I buy a $2,000 laptop when I can go on Amazon and buy it and not pay sales tax? Now that's since changed. Amazon pretty much has a nexus in every state now, so they're going to charge you sales tax, but there was a time where that wasn't quite the case. And there's still retailers like that. Like, for example, why would I walk down to the local Best Buy and buy a laptop when I can buy it from Adorama and not pay sales tax, right? Like, that's a legitimate question. Well, the reality is I'm actually required to pay use tax. Most people don't realize this, and New York has the exact same requirement that if you purchase an item and you do not get charged sales tax at the time of purchase, you're required to pay a use tax if you use it in the state. If I buy a camera from a retailer in California and they didn't charge me sales tax, I'm required to pay use tax where I'm at here in New York for that item. So let me give you two really practical examples of this. And these are actually derived directly from the state, so I thought they were really applicable. This is first one is about a service, and they basically say, hey, if you have, let's say this guy has an amp, it breaks down, he drives to Connecticut, drives over there, gets it repaired, guy charges, whatever, $500 for it. He drives back, and the guy in Connecticut says, you don't live here, I'm not going to charge you any sales tax. He drives back to basically the state of New York, he's required to pay a use tax on that. Now, and this is probably the more common example that we would run into, is when you buy something through an online retailer and they don't charge you sales tax. And most people don't really bump into this. The states, and I'm going to be honest with you guys, they don't have a great way of keeping up with it. But that's really no excuse for just pretending like that's not an obligation and not contending with it. And I'll give you an example here in a second. But a really prime example of this is I had a buddy who was buying a bunch of equipment and renting it out in Atlanta. He started like a little rental business. He was doing really great for himself. But that's like a really tough spot. He was buying it all online, wasn't being charged sales tax. So it's a huge deal. If you buy $100,000 worth of equipment, you don't pay any sales tax. If you get audited, it's a nightmare situation if you've never remitted any use tax, because you're using all of that equipment. In this case, he was in Georgia. And so that's a really good example of when it was really essential for this guy, once he found out, to go ahead and pay the use tax on all the equipment he bought that he didn't, because he bought it in a different state. He bought it online. I think some of it may have even come from Adorama. All right, let's see here. These are a little bit more technical. Basically, there's two kind of rules as it relates to what use tax you pay. Sometimes it pertains to where you deliver the item. Like if I have an office and I deliver items to my office, then I'm going to pay use tax at the tax rate where my office is located. But if my office and my home are the same address where things are getting shipped, then I pay the use tax on the tax rate, the sales tax rate, in the region where I live, the county in which I live. And there again, if I don't know what that is, which you probably do because you purchase stuff around your home all the time, but you can go online, look at that sales tax rate, figure out what rate you need to pay use tax on whatever items you're purchasing. But to give you an example of how this went bad for somebody, and this example I want to talk to you guys about is actually something that, ironically enough, was told to me by the basically top tax analysis from the Department of Revenue in Georgia. I kind of like to do this thing where, like, you guys have probably heard the saying, keep your friends close, but keep your enemies closer. So just occasionally, I will call the state, and I have some good relationships now with them due to my job. And there's one lady, she's one of the top in tax analysis. Her name is Andrea. And she's middle-aged, maybe a little older, but she's not always the happiest. I don't know if she likes her job, but who can blame her when you're a tax analysis for the Department of Revenue? But anyways, we talk, and she was telling me just 2 weeks ago a story about a guy who just got done getting basically raked over the coals by the state. He was an entertainment business, and he basically was a DJ, would show up to corporate events or just parties, and he would DJ, and he wasn't charging any sales tax, and he was purchasing equipment, never even remitted any use tax on that equipment. A lot of it was purchased out of state. But he ends up getting audited by the state, and he decides to fight the state in the audit, basically saying, oh, I'm only a service. So as a service, I don't really have to pay any sales tax or anything like that. But the issue was he had a bunch of discrepancies in a lot of his invoices and what he was communicating to his clients. And there was on a lot of invoices, and just like it is in New York and in Georgia, when there's any exchange of personal tangible product, therefore the entire amount of the invoice is now taxable. It's so the state basically raked him over the coals. 2 years later, he ended up on a payment plan with the state, not to mention the myriad of basically attorney fees that he had along the way. So it's a good example of somebody that, everybody thinks, I'm not going to get caught, it's no big deal. But you just don't want to be the person that does get caught, because the reality is, like, it's never a good feeling to end up in audit by the state, but obviously it's not a good feeling when you know you're doing something wrong. Or if you don't know and finding out that you are, right? It's always better to just go ahead and contend with what you're required to do and kind of head it off and be preemptive rather than reactive to something happening, then it's too late. What questions do you guys have for me about that? Yes.
So, since I'm a freelancer, some of my clients are based in New York, some are based in other states.
Yes.
So for clients who are out of state, would I have to pay a sales tax if there's sales tax in that state, or would I have them pay sales tax?
Do you live in New York?
Yes.
So if you have clients, so the question is, if I have clients that are out of state and you're working with them and you're exchanging tangible property, am I guessing?
No, just digital.
Digital goods? Yeah, then no obligation to collect and remit sales tax to New York.
But use tax if it's being used outside of the state?
So use tax pertains to items that you would use. Let me clarify that. Yeah, so like anything you would buy equipment-wise, or like for your, like you buy like a desk for your office or something, that's something that you use in Georgia, or New York. We're not in Georgia. That's where I'm from. You guys are from New York. Any other questions? Good. So that's going to wrap up then my segment on the boring stuff. I'm just kidding. I hope you guys found that to be useful. But I just want to kind of reiterate, if there is more detailed questions or things that you have follow-up, and this goes for anybody that may be watching live, we'd love to talk with you about it, and just through what's going on personally, or if just in general about business you have questions, we're happy to speak with you about it. You can go online, you can find our contact information, submit a little inquiry, you can get our newsletters. We send a lot of really great relevant information out about once a month. We're not going to blow up your inbox like some people. It's like literally, and sometimes we're a little slow on it. It's like every other month. It just depends. But it's really good and helpful things for the average entrepreneur and freelancer. Okay? Good. All right, so Ben's going to come up now then.
All right, check. So I know that was a lot of information to take in, it's amazing how much it takes to run what may feel like a small one-person business. Like there's all these convoluted things that happen, especially in New York, county by county. It's a lot to take in, but that's why we created this company, because we want to help people like ourselves, like you, basically we want to guide you through the complicated paths of the business world. So I'm going to talk about, first off, a few more philosophical things, and we'll go into some more practicalities. So it's not going to be as technical, not as informational, but we're going to cover some things about retirement. So if you want to retire, someone who's self-employed, like if you want to live the self-employed lifestyle the rest of your life, we're going to teach you how to retire with dignity, with hopefully millions of dollars in your bank account, right? We'll talk a little bit about insurance, and you can ask us more about that afterwards. And we're going to talk about finances overall, personal and in your business, as far as budgeting and things like that. So a little bit about me. My name's Ben. I'm a commercial photographer. I started off in wedding photography 10 years ago, and then I moved to commercial photography about 5 years ago. Is also when I moved to be fully self-employed. So I have a studio in Atlanta. I do a lot of commercial photography and DPing as well, so I'm a cinematographer. And then I'm also involved with Caleb with this company. So if you have any questions about commercial photography, how to get clients, things like that, cinematography, you can also ask those as well after the session. So the question I want to ask you, the philosophical question, the deeper and more internal question is, why do we work? Okay. What I mean by that is, why do you get up in the morning and do what you do? Why do you want to be someone that's self-employed? How many of you are working like a part-time job that's has nothing to do with what you love, or you're self-employed? Raise your hand. And how many of you want to be full-time self-employed at some point in your life? Okay, all of you, right? That's the dream, right? That's the ideal world for you. So I ask this question to myself pretty often because I want to recenter my focus, right? So why do we work? And the main question is, what is your why, okay? And so you need to establish your why, right? And that basically means, I'll give you one of my whys, and this is more on the family side, right? But as long as I can remember, ever since I was a kid, my parents were in debt. They've always been in debt. Some kind of, whether it be mortgage, whether it be business debt, whether it be credit card debt, that's what I know. I didn't come from, by any stretch of the imagination, a wealthy family at all. I've had to work and earn my way through pretty much everything, right? And my parents taught me the value of a dollar, but I watched my parents struggle over and over and over, and it ended up in divorce. I mean, that's basically what it ended up with, was the struggle of money ended up causing stress over the years, and they end up in divorce, right? So when I got older, when I became self-employed, when I figured out what I want to do for the rest of my life, which is basically be an entrepreneur. I'm not always going to stick to commercial photography, but I do love it right now, right? So I thought to myself, okay, I see my parents struggling. They're still struggling. They're in their, they're almost in their 60s now. They're divorced, obviously separated, like I said, but they're still struggling. They don't have these great big retirement accounts. They still have debt on their house. They still have business debt, from 10, 15 years ago. They're still trying to figure out how to pay off. So I decided very, very early on that I'm not going to go into debt. I'm not going to go down that path, right? And so I'm married now. My wife and I want to have kids. And basically, one of my internal whys is I want to change my family tree, and I want to have a different legacy than my parents left us, me and my brother, right? So I'm working as a self-employed entrepreneur because I have dreams and goals and aspirations that I want to achieve, and I want to do something for my family. I want my wife to be able to not have to work if she doesn't want to. I want to, see my kids go to college debt-free, because in America, student loans, that's becoming the normal thing, right? And we all know, some of you might have student loans, right? And that shouldn't be the normal thing for us. We should be able to earn a living and live comfortably if we want to, if we strive for it. And New York's hard, right? New York's a city of hustle, and you're just trying to make rent most of the time and hope that the next year they don't jack up your rent price too much. Like it's hard here, very, very hard. I will say it's a lot easier in Georgia. It's one of the reasons, I thought about, okay, I might move to the West Coast, I might move to LA. And then I saw the prices there and I was like, I don't think I can do it. And so even though Atlanta is getting more and more expensive, it's a lot easier. And so you guys have it twice as hard as the rest of the people in the United States, essentially. But that doesn't mean that you can't achieve what you want. It doesn't mean you can't make it here. And so when you establish your why, it gives you a drive and it gives you a reason to keep going. It gives you a reason to work the 3 jobs so that eventually you can work one job, the one job that you want to do, okay? So once you have firmly established your why, and again, that was just one of my whys. I have multiple different whys, right? Once you have firmly established your why, I believe that everything Caleb taught us becomes not only more important, but it becomes necessary, because in order to fulfill your why and become a successful, fill in the blank photographer, cinematographer, real estate agent, whatever it is, right? You have to be good at running the business side of things. And it's not easy. Like it sucks sometimes, right? It sucks to be the only person doing everything. You got 5 hats on, 10 hats on, depending on what day it is, because you're the only person trying to make this thing happen. It's your dream. You care about it the most, right? But you have to be good at running the business side of things in order to establish something long-lasting. And so you have to take the time and actually learn it and actually do it. And that's why you're here, right? Like you took the time, and you said, I'm going to try and learn about some of this stuff because I care about it. And you have to do things legally and with excellence in order to establish something that is long-lasting. And there's so many avoidable roadblocks. Some of the stories Caleb was talking about with court cases and IRS audits, like those things were avoidable and they pleaded ignorance, but the IRS doesn't care about ignorance, right? So that's why we made this company, because we want to inform people so they feel more empowered to do what they love. And I talked to you earlier, and you said you got burnt out at your job, and you get that from time to time. And I think a lot of us can get burnt out even from being self-employed, but I think mostly it comes from working 2 jobs or working a job you don't like. And like I said, New York is a city of hustle. You're always turning the wheels, right? But I think there's a huge difference between being burnt out and feeling just really, really, really tired, okay? And I'll tell you why. So you could work 12 hours a day, 7 days a week, doing something you love, and that makes you tired. But you could work 8 hours a day, 3 days a week at something you hate, and that makes you burn out. Because you don't care about it. There's no passion, there's no drive, so you don't feel like you're making any progress day to day. Those hours are just wasted. And that's what makes you burn out, ultimately. And so, it's an interesting thing being self-employed because you ultimately decide your destiny. You're in the driver's seat, and you're the one in charge. And not everyone has that opportunity. but you guys have chosen the figure it out as you go lifestyle as it sometimes feels like. And that's a huge thing, and it's an important thing. The majority of America is made up of small business. I mean, that is what grows our economy, okay? Our goal at Terms and Conditions is to help small businesses and entrepreneurs and creatives. We want to make this process easy and as simple as possible. And part of the way we do that is through teaching and instruction, workshops, and then one-on-one coaching. One thing Caleb didn't mention is, we want to make people feel comfortable when they use our services. So we have two in-house CPAs. And so we do taxes all over the nation. So if you're like always looking for a tax person, or you're just doing it through TurboTax every year and you're not sure if it's being done right, we have two people who have over 50 years of experience and who help freelancers on a regular basis. So if that's something you're interested in, you can contact us about doing your taxes, because tax season can be pretty stressful, but we try and alleviate that stress as much as possible. So my goal for you is to think big and think long term. And that just means that it's time to plan ahead, and you need to be intentional and create your blueprint. And what I mean mostly is there's a life blueprint, but there's a business blueprint, right? So let's say you had a few million dollars and you wanted to commission a construction company to build yourself a house. And then they show up the day of and they just start going at it, but you didn't meet with them before about any plans, right? So there was no blueprint, but you would never do that. You would never hire a construction company, have them show up with some 2x4s and hope that they build a house that you want with a few $1 million. You wouldn't trust them to do that, right? You would make a timeline of, we're going to get this house done in 8 months. They're going to have a proper blueprint with all the measurements, everything that we need, all the materials. And it should be the same way with your business. You should have a business plan. And it could be as simple as writing down some goals for your year. And where do I want to be next year as far as how much money do I want to make, an additional $80,000 next year? What's the rate of growth that I want to be at? It's not, as complicated as you can Google and find a business plan template online if you want. But most of the time, it's just writing down simple goals and simple things that you want to achieve over a long period of time. So where do you want to be in 5 years? That's the kind of question you want to ask yourself. And I know, most of the time you're just thinking, when's the next paycheck going to come this month, right? But in order to keep growing and to keep growing your revenue and to keep growing your business overall, you have to start thinking long term, especially if you're trying to make the jump from I work a full-time job that is, supposedly steady, and I want to move to a self-employed position. So you need to start planning that jump, and you need to make sure that the boat is close enough to the dock so that when you step off, you don't fall in the water. You need to make sure that you have the right things in place so that you can jump to being self-employed. And what about 10 years? There's no limit as to where you should, we can't plan everything in our life, but you should be writing things down that matter to you. And if you say, I want to be photographing this celebrity in 5 years, that's a goal, that's a dream, that's something that you should write down though. And it should be something that you're looking towards. Zig Ziglar said, if you aim at nothing, you'll hit it every time. Something that I remember, almost every day, because I try and write down my goals as much as I can. And that's kind of the next thing I want to talk about. So I want to lose weight is not a goal. I want to lose weight is like a wish. It's like a dream. It's like, I want to, I guess. Like, I don't know. So you want to create measurable goals, right? So that the personal example is, I want to lose 30 pounds in 3 months. Well, now you have something to move towards and to achieve, right? So that's 2.5 pounds a week for the next 3 months. What do I need to do? What kind of food do I need to be eating? How much do I need to run? If you write these things down, they need to be measurable, right? So a business example might be, I want my business to make $120,000 in 2018. So I need to make 10 grand a month. How am I going to do that? Where am I going to get that? Where am I going to get those clients, etc. So they need to be measurable ultimately when you write them down. And you need to write them down on paper. You can write them down on your computer, that's fine. I think it's more impactful if you write them down on real paper and then maybe later you transpose them over to your computer. But there's several studies that say you're 42% more likely to achieve your goals after writing them down. Why? Science. I'm not a doctor, I didn't do these studies, but there are real studies that say the right hemisphere, I call it the imagination station. Imagination station. It's your creative side of your brain, right? So this is the side where you daydream. That's the side that says, I want to lose weight, but that's as far as it goes. It goes no further than that, right? The left hemisphere is a logic based, and that says this is we got to figure out how to do this side. So once you write it down, all of a sudden your left brain says, okay, this is solidified, this is serious. Now how are we actually going to achieve this? And it starts turning the tables psychologically in a real way. So if you do have goals, I recommend that you write them down. And I would say, write down, I would say, some big yearly goals. And then obviously I would say you need to write down goals for your day, for your month, whatever it is. I write down, obviously every January, everyone has New Year's resolutions. I don't do resolutions, I just do goals. I just stick with goals, and I try my best to achieve them. I usually do more than I know I can handle, and because if I do what I know I can handle, I'll do them, but if I do a lot more than what I think I can handle, I'll do about, probably 70% more than I thought I could. So write down your goals. That's my main takeaway from that. Finances. This is going to be the longer section. I kind of moved through everything else quickly because this is where I want to slow down and I want to drill as much into you guys as possible. Okay, so how many of you have a financial plan, personally? Anything written down? Anything in your head? Right, okay, so this is what most people's financial plan looks like. Fire, ready, aim. That's the last, that should be first, right? It should be ready, aim, fire, right? But that's what most people's financial plan looks like in their business and on the personal side. And if you want to win in life, you have to get this part of it right. Because you guys work too hard to be struggling with money, right? To not have a plan with your money, right? You work too hard. So my cry to you is don't wing it. Don't wing your future, because it's a big deal. Everyone only has one shot at this. We can hit resets every few years, but we have one shot at this whole thing called life. And like I said, you work too hard not to have a plan. So Charles Schwab did a survey back, I think it was in 2016 or 2017. Might have gotten worse by now. And the survey says that only 36% of those surveyed had a financial plan. And they did it with like 10,000 people of various ages from like 18 to 55 or something like that. So only 36% of those surveyed had a financial plan. Only 20% of those people surveyed bothered to put that plan in writing. So how many of you think that the people who had a financial plan actually got it done that year, or whatever their plan is, right? Not that many. And then 42% of 40-somethings do not have a retirement strategy. Can anyone in this room say that they have a retirement strategy? And that's what I've heard in New York City, especially, because again, you're just trying to make it through the day, trying to get through the month, trying to make it to the next thing. But retirement is a real thing, and you don't necessarily have to retire as in stop working, but there will be a time in your life where you will not physically be able to work, and you will have to have some kind of money to support you long term when you're older, right? Unless you hope and trust that your family and kids might be able to take care of you, okay? And that's, that again goes back to my why, right? Who knows if I'm gonna have to take care of my parents after they stop working because they don't have enough money and they're still paying off debt. It might be part of my responsibility if I choose to, right? And so we're going to talk about a little bit more about retirement, but I want to go through some very basic steps, and then we'll come back to retirement. So know your financial situation. And what I mean is don't be disorganized, okay? Know your account balances. Know your bank account balances in your business and your personal. There's a lot of memes online where people are making fun of, I hope I can make it till Friday. I hope I can make it till that next paycheck. And that's a real thing. It's a real thing in New York. It's a real thing in Atlanta. It's a real thing just in general because people are disorganized, But my encouragement to you is don't live in fear about how much money is in your bank account. You just need to know so that you're not bouncing checks, so that you're not living on the edge, right? Know your assets versus liabilities, which just means know how much debt you have versus how much money you actually have. I'll tell you a quick story. I was doing coaching sessions for a wedding photographer through Terms and Conditions, and it was a few months back, and we did some business coaching and we did a little bit of personal coaching with their personal finances because they were in a little bit of a mess, okay? We were trying, she's a wedding photographer, so she was trying to get her revenue up for the year, and we were giving her tips on that, but they had a lot of debt, and they honestly didn't know how much debt they had, and they thought, well, the gist of it is they knew they had student loans. They both went to school, they had student loans. They thought they had around $60,000 to $70,000 in just student loans, which may seem like a lot to some people, but it's not uncommon to get $100,000 in student loans now. But once I asked them a bunch of questions, we added it all up, they ended up having over $140,000 in consumer debt, including student loans. So that was credit cards, medical bills, student loans, no mortgage at all. That was just loans that they owed over the next, however many years it's going to take them to pay off, depending on their income trajectory. And that's a hard place to be in when you get to that realization of, okay, I'm gonna look at all my debts and see how much I actually have. For some people, it's paralyzed. They don't want to go get to that point. They don't want to try and look through that. But it is very, very important to face those facts so that you can make a plan. That's what we're about is making a plan and moving forward. So that's knowing your financial situation. Write down your income and expenses. This is a big thing for your business. If you don't have an LLC, if you're not used to accounting, you do need to know how much am I spending on like subscriptions every year? Like how much is my Vimeo subscription costing me year over year, along with Dropbox and everything else that I'm subscribing to? You need to know, okay, I need a minimum of like $300 a month on subscriptions, or however much a year, and then you need to know how much am I making on a minimum basis with my income, so that you can properly budget. So I know maybe it's like I make at minimum always $3,000 doing photography or whatever it is, right? And so I can make my personal, my business budget based off of that $3,000, and then anything else over that is just gravy, and I can apply it to certain things that I want to apply it to. But you need to have some kind of minimum point of, okay, this is how much I need to live, and this is how much comes in no matter what. You need to know what you make and spend, and this includes on the business and personal side. If you guys have questions about budgeting on the business side or the personal side, we can talk about that after. The one thing I will say, there's a great budgeting app for the personal side. It's called EveryDollar. It's on iPhone or Android. It's everydollar.com, or just search the App Store for EveryDollar. It's amazing. My wife and I use it all the time. It's all cloud-based, so you can use it on your desktop or your iPhone, and everything syncs to your bank account. It's great. A lot of people use Mint, but what's great about EveryDollar is its whole purpose is to get you down to a zero-based budget, so that, let's say you have, like I said, maybe a $3,000 or a $4,000 paycheck per month. Well, I know I'm gonna apply that $4,000 to some type of category, so that at the end of the budget, there's $0 left. So it might be that you have $700 left over to do whatever with, but that might go. Then you need to like write something down and say, well, that's just going to go to savings or my retirement or something. It needs to be something called a zero-based budget, and that's a very, very important term, zero-based budget, and that's what EveryDollar is good for. Another thing is live below your means. That's common sense, but none of us always do that, right? We always have something that we try and justify, okay? And I will go into some justification things that all of us, especially self-employed people, especially photographers, and everyone nowadays, we just want an iPhone, right? It used to be where you could either trade it in and maybe they'd give it to you for $200 with an extended contract. Now you can just lease it. Now you can just pay whatever it is, $50 a month, and get a new iPhone every single year. But you don't always need the newest iPhone. You really don't, right? And we all know that, but it's hard because it comes out, it looks so nice, it's a better camera, you gotta get the Instagram, right? It's not always necessary. The last one is have an emergency fund. This is probably one of the most important things you guys could take away from this. You need to have an emergency fund in your business, and you need to have an emergency fund on the personal side of things too. All that means is you need to have 3 to 6 months of expenses in your bank account ready for something if something happens. So if you lose your job, you can live off your emergency fund for a couple months. A lot of you live in New York, so you don't have a car. But if you did have a car and your car breaks down, you can repair it instead of putting it on the credit card and getting into debt, right? You need to have an emergency fund. If one of your family members dies in another family, I know that's morbid, but it can happen, and then you don't have any money in your bank account, so you got to put like someone's funeral basically on your credit card, and then you have to pay that off over the next few months, and all you think about when you pay that off is your family member that died. Like, that's a sucky situation. I don't want any of you to be in that situation. It's real, it happens all the time. So have an emergency fund, 3 to 6 months of your expenses. And the one thing I will talk about that is business debt is not your friend. A lot of people will encourage people to get a business loan, get a bunch of equipment, whatever it is. Financing is become a very normal thing in today's culture. And if you didn't know this already, you should know that credit cards are the most marketed thing in the world right now. They spend the most money on marketing credit cards to you because they know that they can make money on interest rates. It's the most profitable thing out there, consumer-wise. So the reason I would implore you to not go with any type of business debt is a few different reasons. When you use your own real money, you make slower and better decisions. Now, over the past year, I had been looking for a studio to build out, a production studio. And being someone, and again, I will say, I don't have a credit card. I've never had one. I've been fine. I travel all the time. I rent cars. I go to hotels. I have a business debit card and I have a personal debit card. I've never had a problem. So it definitely is a myth that you need a credit card. Some people say, well, if I get an apartment, they have to check my credit. A lot of places will just take a bigger deposit if they can't check your credit because you have a 0 credit score. I don't have a credit score, and I'm fine. A lot of people think that you have to have a credit score to live, and it's just not true. But back to this, when you use your own real money, you make slower and better decisions. So what I mean by that is, I started to build out a studio over the past year, and I said, okay, this is basically the amount of money that I can spend. And some people said, well, you've got like a 3,000 square foot space, you should just get it all done at once. Now it's taken me pretty much 6 months to fully build it out and finish it. There's another 1,000 square feet that isn't even finished, but I don't have the money for it yet, so I can't do it. A lot of people said, you just need to take out like a 50 grand business loan and then pay it back later. But the problem with that is once I get that loan and it's in my bank account, all of a sudden, psychologically, it doesn't feel like real money. Because it's really not my money. I don't actually have it. So I'm gonna, if I see 50 grand in my account, I'm gonna say, oh, okay, well, let me just buy all my furniture from West Elm, and let me just find the first electrician that I can get to do all the custom work, and I'll just, basically, I want to get it done as soon as possible. So I'm gonna use the first contractor I find on the street or whatever it is, and it might be more expensive. Now I'll give you a really clear example. I had to do a lot of custom electrical work for the studio because we have to be able to plug in big production lights, lighting grids, all that. I had to get someone who understood, what we needed and not charge an arm and a leg. So I ended up basically really sitting down and interviewing about 15 electricians before I found the one that I wanted. And the first 5 or 6, they were all quoting between 13 to 18 grand, right? And most people would stop at like 5 and say, okay, that's, they're all reasonable, I should just do it. Well, I was like, no, I'm gonna just keep searching. I feel like I need to keep doing that. Because again, it's my money. If I'm gonna spend, 15 grand, it better be worthwhile. Like, it's a lot of money, right? So I eventually found someone, on Craigslist actually, and they were actually willing to do a work trade, okay? So I could do some design work, I could do some photos, some video work for them, in exchange for a discount on their electrical work. So, I think the average, like I said, was about 15 grand for the parts and the service to actually get all the electrical work done. She did it all for 4 grand. All because I realized this is my money. I'm not just gonna find the first person out there. I made a slower and a better decision. I saved myself about $10,000 that I could use on something else. And so that's a really, really good example of using your own money makes a big difference emotionally because you worked hard for it, right? So you make slower decisions. In other words, you feel your money. Another good example is plastic versus cash, okay? So we spend on average about 12 to 18% more when using a credit card instead of cash. And that's how credit card companies in general can do the whole cash back thing. They can do the whole airlines thing, because when you spend cash, like McDonald's, when they first started accepting credit cards, they found that the average person who used plastic and swiped a card spent $7.80 on a meal, while the person who used cash was only $4. It's a big difference. It's almost a 50% difference, right? And so that's the same thing when you're using, basically the bank's money or Visa's money versus your own money in your own account. Because if you pay for it with your card and you swipe it, you don't emotionally feel it. But there's actually real studies that show when you pull out hundreds of dollars of bills, basically, a $100 bill, and you put it on the counter, it activates the pain centers in your brain, and it says, like, this sucks, like, this hurts. But when you swipe plastic, you literally don't feel it. It does not register emotionally. Same thing goes when it's real money in your bank account versus, well, if I just swipe this credit card, I won't see this on my statement for another month. It's not a big deal. And then it's less painful because I'm just going to pay for it over the next year and a half, 2 years, right? And so you end up just spending more and justifying the expenses because, oh, it's just $40 a month. But I buy a lot of my stuff in cash, and I actually buy a lot of it used. Adorama has a great used section online. I probably buy one piece of new equipment a year, and then on the other side, I probably buy about 15 to 20 used pieces of equipment a year. And I usually never have any problems. I totally recommend Adorama. Craigslist is good as long as, I always bring a bill of sale. It's just a template online that says, this is the item, this is the serial number, this is their name and address, this is the condition it's in. Just a really simple receipt. So Craigslist is fine. Just make sure you take someone with you. Do it at a bank or a police department. Make sure you be safe about it. But yeah, Adorama has, ultimately Adorama is great because when you buy used, you get a guarantee of, okay, this is going to work for at least, you can return it 30 days from now, just like a normal new item, but you save a lot of money. I don't think I've actually ever had a used product fail me in the 10 years that I've been doing this. And maybe that's just luck, but a lot of people think they have to buy new. It's not true at all. It saves you a lot of money, especially when you're first starting out. So biggest takeaway from that, I totally recommend trying to spend more of your own money instead of justifying the need for something, right? You can rent stuff from Adorama too. That's a great way. If you need something right then and there, you don't always need to buy it. Sometimes you need to use that money for something else. Again, maybe you need to build your emergency fund now, right? So so we'll move on to retirement because this is a huge one. None of you said that you had a retirement strategy, and that's okay. But from here on out, after you hear this, you definitely should have a retirement strategy because, again, you don't want to end up 30 years from now, 40 years from now, whatever it is, and you have no money to live on when you can't work. So there's going to be 3 things I talk about. Roth IRA, self-employed 401k, and traditional IRA. And I'm going to focus just on the Roth IRA. If you want to find out more about the self-employed 401k or the traditional afterwards, you can. The biggest thing about the self-employed 401k is it's very similar to if you work at a corporate job, you get a 401k with some kind of match, right? And with the 401k, you can usually contribute up to $18,500 a year in a 401k. The company matches you some small percentage, above 3%, and then that money grows and grows and grows over time, and you can't touch it until retirement, right? The thing that's hard for people with 401ks is if you're self-employed, most people don't even know you can get one, which you can. But the other thing is they see the $18,500 contribution number and they're like, well, I can't contribute 18 grand a year into my retirement. That's a lot of money, right? So the Roth IRA is a great solution for that because you don't have to, but you can contribute up to $5,500 a year. So it's a great starter type of retirement account, especially if you're on the younger side. Now, if you are on the, I have a few examples in here, so we'll go through them as far as what kind of money you could have in that account if you started it, at a certain age. But what is the Roth IRA? Basically, it just means that it's an after-tax retirement account. It's the simplest way to put it. So basically, you put money into it that is post-tax, right? So that means that, let's say, 40 years from now, after contributing all of this money, you have a few $1 million in your retirement account. You do not have to pay taxes on any money that you're pulling out. okay? Because it was post-tax when you put it in. You already paid your taxes when you put it in. So after tax is a great way to go. Traditional IRAs are pre-tax, so you will have to pay taxes on the however many millions of dollars that you would pull out. And so I always recommend a Roth. So we'll go into a quick example, a few quick examples, and these numbers should get you excited because this is how you retire with dignity, especially as someone who's self-employed, where you don't have the guidance of a corporate, like a normal, typical corporate job, right? So let's say you're 30 years old. A lot of examples, they try and use like the 18-year-old or whatever, and none of us are 18 years old. Like it just doesn't apply to most people, right? So let's say you're 30 years old, and you want to put $200 a month into your Roth IRA, okay? And let's say that your Roth IRA, which should be invested in good growth stock mutual funds, which you should write down. Growth stock mutual funds, okay? Growth stock mutual funds. So you would, let's say you put in $200 a month and you have a 10% average rate of growth over the entire time until you're age 65. So you're just putting $200 a month every single month, just automatically coming out of your account into the Roth, right? 10% average growth, age 65, you look up, you go into your, you type into your computer and you say, okay, how much money do I have? I haven't looked at it in a few years, right? You will typically have around $650,000 after about 30 years of growth, 35 years of growth, right? So that's a decent amount of money, okay? But that was only, it was only $200 a month. So that's not the max you could put in every year. And again, it's only $5,500 a month, a year max that you could put into your Roth. It's really not that much money. So let's say you're 25 years old. So let's come back, 5 years for those of us that might be a little bit younger. Let's say you're 25 years old, and you put in $200 a month, same, 10% average growth until age 65. You didn't put in that much more money, but because of the 5-year difference, there's this thing called compound interest. And that's what grows your money, and then it ends up being over $1 million, just over $1 million, because it was a 5-year growth difference. So if you waited, until you were 70 instead of 65, at 30 years old, you would have had the same result. If you waited till 70 to look at your retirement account. So let's say you're 25 years old again, but you put in the max, right? The $5,500 a year max, which is only $458 a month, which sounds like a lot on a monthly basis, but when you look at the total, it's $5,000 a year. It's not that much, and it really, when you really start budgeting and you're like, okay, can I afford $5,000? Yes, I probably spend that much on like eating out and coffee and all these things per month, right? I could probably figure out a way to make this work. So again, you're 25 years old, about $500 a month, 10% average growth until age 65. You will have $2.5 million just because of a small amount of money per year, okay? That's a pretty decent retirement fund that you can rely on at that point. That's something that you could actually live off of. And anyone can get a Roth IRA. And it's excruciatingly important, especially if you're a self-employed business person, because no one's telling you to do this. You don't have a corporate boss or someone telling you like, hey, we have a 401k plan, you should get in on it. Like I'm telling you guys now, you need to have some type of retirement strategy. And it matters way more if you're younger, because you will have so much more money later on. If you start later on, it's fine. And there are other options, like you can do a Roth and you can do a 401k, and you can still end up with a lot of money. But if you don't have a huge budget, the Roth is your best way to go, okay? And if you have questions about how do I start a Roth, we can get into that later. You can ask us. We don't do it personally, but we have people we can recommend in the New York area that are, have the heart of a teacher, not a salesman. They will help you through it. There's no minimums to contribute, unless, so the people that we deal with, there's no minimums to contribute. Some like retirement specialists, they require like a $500 minimum deposit or a $2,000 minimum deposit, something like that. But the people we deal with, you could put in $200 and you'd be fine. So ask us about that later if you're interested in getting that started. We don't make any commissions off of it. We're just trying to help. So an interesting headline, millennials are spending more money on coffee than retirement plans. This is a real thing, very, very real thing. This is back in 2017, and I've read a few more things now that it's even more extreme when it comes to craft beer and coffee and food and whatever it is. We spend a lot of money on food, and we're basically eating our retirement is what it comes down to. So the average millennial American spends about $1,200 a year in coffee shops. That's a lot of money, and that's definitely more apparent when you're self-employed and a freelancer, because you get tired of working at your home by yourself, and you say, I'm just going to go to a coffee shop, and you start doing that twice a week, 3 times a week, 4 times a week, and then you start having 2 or 3 cups a day at this place, and then you end up spending $1,200 a year on coffee, which is basically it's almost half your Roth IRA. So you could have been funding that. You're just drinking away, Anyway, that ends up being $3.28 per day that you're spending on this. The average person. Not everyone does that. Some people are more self-restrained, right? But what about more enjoyable drinks? Okay. What about alcohol? The average millennial American spends $1,500 a year on alcohol. So that is $4.27 per day, and that is $2,700 a year total on just drinks. So could be half of your annual Roth IRA contribution. I hope you really like the drinks, because you could have had a few $1,000,000 in your retirement account. My point with all this is that you need to think about these things, and you need to be intentional. You need to set limits and make a budget, because it is tough to be self-employed, and you need every dollar that you can scrounge in order to reinvest into your company, in order to reinvest into yourself, in order to have a retirement long term, right? Again, I can't stress it enough. The younger you start your retirement, the more money you will have. It is not a hard thing. You set it on auto pay, and it drafts $200 out of your account. Whatever you want it to set. It's not hard. It's anyone can retire a millionaire now in America. It is not a hard thing to do. We have a lot of privilege here, in America. It is a great country to live in. Budgeting scares people, but the thing I want you guys to know is a budget is just telling your money what to do. It is not a restraining order. It actually gives you permission to spend on certain things. So you can budget $100 a month on coffee if you want. It's not a big deal. It's your choice, but now you're at least being intentional about it, and you're writing it down and saying, okay, I will spend this amount of money, but then I will also, in this category, I will put money into my retirement account. And now you have a plan, right? So now you don't have to feel guilty about going out to drinks with friends, because you have a plan written down that you yourself have given yourself permission. So a budget gives you freedom to spend and reinvest back into your business. So if you know you're going to need a new lens in a year or a few months, start saving the money for it. Don't get to a shoot and realize, oh, should I rent it or should I buy it? I have the money. But if you don't have a plan, you just might end up impulsing and buying it, even though if you had made a plan, you could have used that money for something else that was more important and just could have rented. There's a lot of different things to think about, so just remember to be intentional about it. Does anyone have any questions so far? Okay. So I will quickly talk about business liability insurance and gear insurance, and then personal disability and life insurance. Because again, those last 3 and 4, if you're self-employed, you're usually not aware of them, and you don't have a boss to tell you about these things, right? So when you're self-employed, especially being a photographer or videographer or whatever it is, you need to get business liability insurance, okay? It's a huge, huge important thing to have, and it's not that expensive. You can get $1 million policy for, depending on who you go to, a few $100s a month, a few $100s per year, okay? And it's really, really important to have, especially some wedding photographers who have it, like their clients or their venues will require it. They won't let you shoot unless you have it. Because then you run into instances where someone does trip over a tripod and they sue you, or you don't have insurance to pay for things, right? It happens, and there are real court cases to substantiate that. So I recommend for business liability insurance and gear insurance, which I have 40 or 50 grand in gear insurance, and it covers theft, it covers damage. I have a $250 deductible. It's $600 a year. It's not that much money, and if something happens, I just make a claim. It's not that big a deal. Athos Insurance is one of the best in the industry to do business liability and gear insurance. AthosInsurance.com. Take a picture of the slide if you haven't already. Anyone have any specific questions about insurance? Cool.
So let's say you're sole proprietor,
Yes, sole proprietor.
right? So you
Yeah, usually, so usually you have to put the insurance under an official business name. You have to register or transfer it. And usually companies will let you transfer it to a different name, right? Or sometimes you have to take out a full other policy. But if you are a sole proprietor and you're like, okay, I need to be an LLC, what do I do with my insurance? They will usually let you transfer, or you can cancel that policy and then, basically open up a new policy under that name. Does that make sense? Okay. So personal disability insurance and life insurance. If you're self-employed, and let's say a good example is, let's say you're a graphic designer and you use your eyes and your hands because you look at a computer and obviously you need to be able to use a mouse and a keyboard, right? Or you're a photographer and you use your hands and your eyes because, this is your job. You see things, you take pictures of them. Personal disability insurance is really, really important because if something happens to you, if you get in a car accident, if a New York bus runs you over and you're out of work for a year, where's your money going to come from? No, the government is not going to take care of you most of the time, right? So personal disability insurance is extremely important, even for young people like us, okay? A lot of us think we're invincible. We're not. I would highly encourage you to get personal disability insurance. The process is not that complicated. It takes like a month because there's just a lot of paperwork to deal with, but they'll walk you through it. I'll show you the website to go to. They'll walk you through it, but it's like, anywhere from $20 to $50 a month for disability insurance. It varies by age, right? Because the older you get, the more chance you have of being disabled. Or if you're like you're a rock climbing instructor, good luck trying to get like a good rate on disability insurance because it's going to be a lot more expensive because you have a high chance of disabling yourself. But being a photographer, or someone who's self-employed and works at a computer all day, whatever it is, you can usually get really good rates. And you can get long-term disability where they'll pay you for a certain amount of years, depending on how long your disability is. It's not that expensive, and you can usually get it for 50% of your annual income, sometimes more, depending on how much you're paying per month. It's a really simple thing to do. Same thing goes with life insurance. We recommend term life insurance, 20-year term life insurance. It's 15 to 20 to 30-year term life insurance is usually the way to go. This is only if you have a dependent. If you have a kid or someone that depends on you, a parent that if you have a mom or a dad or a grandparent that you're paying the bills, like in the household, and they rely on you, like you need to get life insurance because if something happens to you, like I said, if you get hit by a bus and God forbid you actually die, who's going to take care of your family now? Well, if you had just gotten a life insurance policy, and if you're in pretty good health, you can get like a $500,000 policy or even $1 million policy for like 40 or 50 bucks a month. It's not that much. And then if you die, that money can go to your beneficiary, which might be your mom or your dad or your kid. It's very, very necessary if you have someone depending on you. And the best place to go to that is Xander Insurance for both disability and life. XanderINS.com. Take a picture of the slide if you don't write it down. If there are any additional financial and insurance questions, you can feel free to ask us after the workshop. Yes? Medical insurance, that's another big thing. So let's talk a little bit about that afterwards because it can get complicated. Obviously, we all know the free market health insurance market right now is very, very tricky to navigate. There's a lot of things happening. It's very expensive. There's a lot of things going on, but let's talk about that afterwards. The last thing I'm going to leave you with, we're about wrapping up, is a quote from Henry Ford. It says, "Whether you think you can or you think you can't, you're right." And ultimately, it comes down to you as the business owner, as the individual. If you have a dream, something you want to achieve, if you have goals that you write down, and if you believe you can do them, you will make steps to get there. But if you don't think you can do them, it will never happen. It really comes down to self-belief and making things happen and intentionally making steps every day towards that something, whether that be, I need to budget. Tomorrow I need to set up a Roth IRA. You have the power to do this, okay? That's all. Thank you, guys.